Welcome to the Fifth Beast Production channel. I am not a financial advisor and please do your own due diligence when investing. Cruise operator Norwegian Cruise Line stock has fallen nearly negative 12.4% in the last 5 trading days, which is a much sharper decline compared to the S&P 500 which moved down negative 2.8%. What is driving down the stock? The simple answer is that it may take longer than expected for the cruise industry to get back on its feet. Why do we say that? There are indicators such as a fresh wave of infections in key European markets and rival Carnival cruises disposing of higher than expected ship capacity. So what happens next? Does this move suggest further downside or is this a good time to buy? We think that while in the short run the stock may fall, it is likely to be a good long-term bet considering current levels. We arrive at our conclusion by assessing Norwegian's recent market movement from 3 perspectives. Norwegian Cruise Line stock price decreased by 70% this year, from $58.41 to $17.50, before moving minus 12.4% last week, and ending at $15.33. At the beginning of this year, Norwegian Cruise Line's trailing 12-month PS ratio was 1.94. This figure decreased by 46% to 1.04, before ending at 0.91. This was expected given the worldwide halt in cruise operations, but how is the company relatively placed compared to peers? Compared to Norwegian Cruise Line's PS multiple of 0.91, the figure for its peers Carnival and Royal Caribbean stands at 0.76 and 1.69, respectively. The market certainly seems to be rewarding Royal Caribbean more, but it would be hard to expect Norwegian's multiple to improve until a clearer demand picture emerges. Norwegian Cruise Line stock price decreased by 12.4% last week. In comparison, the stock has increased by 9.7% between 2017 and 2019, and has decreased by 71% between 2017 and now. COVID-19 related problems apart, Norwegian's stock hasn't returned much for investors in the last few years. But what do underlying fundamentals have to say? Norwegian Cruise Line's revenue has increased by 19.8% from $5.39 billion in 2017 to $6.46 billion in 2019. For the last 12 months, this figure stood at $4.65 billion, implying a decrease of 28% over last year's numbers. As far as the profitability goes, Norwegian Cruise Line's net margins have hovered between 14% and 16% in the last few years, before plummeting to minus 43.5% in the last 12 months as operations stopped. This suggests that before COVID-19 spread, the cruise line operator was growing consistently while maintaining profitability. We see no reason why it cannot get back on the same trajectory once the demand rebounds. With that in mind, the current stock price seems an attractive entry point for long-term investment. iEngine analyzes past patterns in stock movements to predict near-term behavior for a given level of movement in the recent period, and suggests about a 48% probability of Norwegian rebounding 10% over the next 21 trading days. Compared to this, the probability of tanking further by negative 10% is 43%, suggesting a slightly greater likelihood of an upside. Overall, it appears that the stock is likely to swing one way or the other by a meaningful amount in the near term. Taking all 3 perspectives together, we believe that while there may be fluctuations in the near term, Norwegian can give good returns to patient investors in the long run.